Thank you all for joining the conference call today. We are now starting the CMIC Holdings financial results presentation meeting for the first quarter of fiscal year ending September 30th, 2021. Today, our CFO Wataru Mochizuki will speak about the financial results overview, followed by a Q&A session. We are scheduled to end at 5:15 p.m. The video recording of this call will later be posted on our IR websites and available to view on demand. Now we'd like to have our CFO Mochizuki explain the financial results for the first quarter. I am Mochizuki, CFO. I'd like to explain the financial result overview for the first quarter of fiscal year ending September 2021 that were disclosed at 3:30 p.m. today. Please take a look at this table for our business segments and corresponding group companies as of the end of December 2020. Our group consists of total 25 companies that include CMIC Holdings, which is a holding company, 23 consolidated subsidiaries, including 12 overseas affiliates, and one equity method affiliated company. For the fiscal year ending September 2021, CMIC Group is executing activities in the midterm plan, including the focus activities such as acceleration of PVC model, promoting globalization, and creation of healthcare business, with the aim of achieving sustainable growth and increasing corporate values in the medical and the pharmaceutical industry that is undergoing changes. In particular, as part of our Healthcare Revolution project creating healthcare businesses, we are developing businesses that will contribute to maintaining and improving personal health, including response to the COVID-19 infection, as well as utilizing our talents in the healthcare arena. Here, I will explain our focus activities in the first quarter of fiscal year ending September 2021. For COVID-19 countermeasures, we provided support for COVID-19 vaccination by our local governments by using the healthcare communication channel Pharma-based vaccine management system. Also, we were commissioned with a PCR testing or social testing project targeting home care providers from Setagaya Ward. In addition, as part of our activities to accelerate and streamline drug developments, we are actively making proposals utilizing digital technologies, including the start of a demonstration experiment of conducting a clinical trial using HARMO. For creating business that contributes to maintaining personal health, a HARMO project was designated by the Tokyo Metropolitan Government as business to establish the next generation wellness solution. In this way, we are formulating our ideas and engaging in activities towards materializing our business models. For IPM solution, Orphan Pacific Inc. received a manufacturing and marketing approval of Oladio capsules 150 mg for the suppression of the onset of attacks in acute hereditary angioedema on January 22, 2021. On the same day, Grifols Therapeutics LLC received a manufacturing and marketing approval of Linspad for intravenous infusion 1000 mg, where Orphan Pacific Inc. has provided support towards the approval as an appointed marketing authorization holder. As seen in these examples, the use of our IPM platform is coming to fruition. In addition, on November 27, 2020, we acquired a certification of the international standard ISMS, or Information Security Management System, in order for us to continue to strengthen information security. Furthermore, on December 21, 2020, we received a letter of appreciation from the Ministry of Economy, Trade and Industry as a company that contributed to the increased production of medical supplies in the COVID-19 pandemic. This is the overview of consolidated income statement. Sales in this quarter were 18,885 million yen, down by 915 million yen, or 4.6% year-on-year. Operating income was 811 million yen, down by 111 million yen, or 12.1% year-on-year. Ordinary income was 803 million yen, down by 108 million yen, or 11.9% year-on-year. Profit attributable to owners of parent was 561 million yen, up by 80 million yen, or 16.7% year-on-year. Earnings per share was 31.06 yen. This is the breakdown of non-operating income and expenses and extraordinary income and losses. In this quarter, we recorded 125 million yen of share of profit of entities accounted for using equity method, subsidy income and others as non-operating income, and recorded 133 million yen of interest expenses, foreign exchange losses, and others as non-operating expenses. We recorded 150 million yen as gain on forgiveness of debts for extraordinary income, 30 million yen as loss on valuation of investment securities for extraordinary loss, 289 million yen for total income taxes, and 36 million yen as profit attributable to non-controlling interests. This table shows sales and operating income by segment. Sales decreased in all segments except for healthcare business to 18,885 million yen, down 4.6% year-on-year. Operating income was 811 million yen, down 12.1% year-on-year, which was below the same period of the previous year. This table shows the orders received and backlog by segment. The number of orders received increased year-on-year in all businesses except for CDMO business. For CDMO business, only firm orders are included in the orders received and backlog, and the annual order plans proposed by customers are not included. This shows the trend in consolidated sales and operating income. Both sales and operating income decreased year-on-year, and the operating margin was 4.3%. This shows the trend in sales and operating income in CRO business. For clinical services, we are working to improve the efficiency of clinical trial process by using Pharma, proposing a new clinical trial model for the new normal, and improving the expertise and technical capabilities of our talents. For non-clinical services, our laboratories in Japan and the United States are in collaboration to actively provide drug discovery support for advanced medicine, including nucleic acid drugs and regenerative medicine. Sales were below the same period of the previous year due to factors such as the weakness in orders for clinical operations in the previous fiscal year as a result of the spread of COVID-19 infection. Operating income was below the same period of the previous year due to factors such as a decrease in revenue from clinical operations, despite an increase in non-clinical operations. In CRO business, sales in this quarter were 8,728 million yen, operating income was 1,367 million yen, and the operating margin was 15.7%. This shows the trend in sales and operating income in CDMO business. We are focusing on a large-scale commercial production project that is scheduled to start production in the fiscal year ending September 30th, 2022, as well as the launch of new facility and a production line in the United States and the acquisition of new projects. Sales were below the same period of the previous year due to a decrease in contracted production volume. Operating loss was recorded due to the decrease in sales and prior investment costs for the contract manufacturing business of biopharmaceutical APIs. In CDMO business, sales and operating loss were 4,913 million yen and 112 million yen, respectively. This shows the trend in sales and operating income in CSO business. Sales and operating income were below the same period of the previous year due to a decline in the operation rates in the MR or medical representative dispatch services. In CSO business, sales were 2,053 million yen, operating income was 225 million yen, and the operating margin was 11.0%. This shows a trend in sales and operating income in healthcare business. Sales were above the same period of the previous year due to growth in the SMO operations. On the other hand, operating income was below the same period of the previous year due to prior investments for the creation of new healthcare businesses. In healthcare business, sales were 2,456 million yen, operating income was 58 million yen, and the operating margin was 2.4%. This shows a trend of sales and operating income in IPM business. IPM business provides new business solutions to pharmaceutical companies that combine value chains and marketing authorization licenses, which are intellectual properties possessed by our group. In this quarter, we are selling orphan drugs, including products developed in-house. Furthermore, we are strengthening business foundation through the provision of IPM platform that includes supporting foreign pharmaceutical companies entering the Japanese market with strategic options. Sales were below the same period of the previous year due to a decrease in sales volumes of some products. On the other hand, operating income was above the same period of the previous year due to effects such as the one from reduction in costs. In IPM business, sales were 924 million yen, operating income was 102 million yen, and operating margin was 11.1%. Now I'd like to explain our consolidated balance sheet. Total assets at the end of this quarter decreased by 74 million yen compared to the end of the previous fiscal year to 89,443 million yen. This is due mainly to a decrease in cash and deposits, despite an increase in accounts receivable, trade, and investment securities. In this quarter, we recorded 1,182 million yen of capital investments, with 930 million yen for CDMO business and 251 million yen for others. Depreciation was 1,264 million yen, and amortization of goodwill was 5 million yen. Total liabilities decreased by 1,042 million yen compared to the end of the previous fiscal year to 54,464 million yen. This is due mainly to an increase in long-term debt and others, and a decrease in short-term borrowings, provision for bonuses, and others. Total net assets increased by 967 million yen to 34,979 million yen. This is due mainly to an increase in valuation difference on available-for-sale securities and others. While there is no clear end in sight to the spread of COVID-19 infection, based on the information available at this point in time, there are no changes to the consolidated earnings forecast for the fiscal year ended September 30th, 2021 in the consolidated financial results for the fiscal year ended September 30th, 2020, announced on November 6th, 2020. The impacts of the third wave of COVID-19 infection and the state of emergency issued on the January 7th, 2021 on our business may include restrictions on visits to medical institutions and a decrease in contracted production volume. In the meantime, we will strive to expand clinical trial and post-marketing surveillance projects related to the COVID-19 infection, as well as support services for local governments and medical institutions. If there is expected to be an impact on our business performance in the future, we will disclose it promptly.